Why Fibonacci retracement works is because price always have to retrace. When something is already buying, it does not just buy straight to the moon. They always have a retracement that come back down. So guys, this is one thing about Fibonacci retracement. You guys should be careful where you guys are buying. That's the tricky part. Always know price action and best place to buy from, which is guaranteed. And then you can capitalize more, putting in good risk reward trade and capitalize. So what's up guys, today we're going to be talking about Fibonacci retracement. So Fibonacci retracement is a tool which can be part of your confluences while you're placing a trade here, and your take profit entry and how many trades you can take with one Fibonacci retracement. So Fibonacci retracement was founded by Leonardo. I think that's his name. I don't really know. I think that's his name, Leonardo. Okay. So Fibonacci retracement is just like 1 + 1 give you 2. So that's what Fibonacci retracement is. But we're not here to learn that. We're here to learn how to use Fibonacci retracement so that it can be part of our confluences on why we're taking this trade. So I'm going to go straight to our chart to show you how to use Fibonacci retracement, guys. So I'm going to go straight to trading view, which I use to analyze. So guys, right here, this is Fibonacci retracement. So this Fibonacci retracement is my mentor's Fibonacci retracement, which works for me also. If you guys don't know him, he's Swaggy C. Most people know him. He's really popular. So in his video, I can remember watching it early last year. He said, watch the video over again if you don't understand. So I really wanted it to work for me. I watched it almost 10 times. I said it in my second video I uploaded on YouTube. I said it that I had to watch the video 10 times for me to understand how to use Fibonacci to show how slow I was learning this shit. Yo, it was really bad. But anyway, it paid out now because I'm making money. So we're going to go straight into it. I'm going to talk about my last week trade. So I'm going to take this off. Okay, so guys, I'm going to show you how to use it. So from here, we're going to go from the lower low to our higher high from a break of structure. It was a downtrend, as you guys can see. I'm going to show you guys to see as a downtrend. Okay, as you guys can see, this is a downtrend. I believe we're going to be having a break of structure right here. I'm going to be having a break of structure right here, so market should be going back up. So I'm going to proceed to show you guys how we can use Fibonacci retracement. So we are going to take it from our lower row right here, passing the break of structure to our higher high right here. So guys, this is Fibonacci retracement. Let me extend it further. So guys, I'm going to be starting off with the 38.2 extension, 50 extension, 61.8 extension, and a 78.9 extension, which people don't usually use like that. So why Fibonacci retracement works is because price always have to retrace. When something is already buying, it does not just buy straight to the moon. They always have a retracement that come back down. So when price is coming back down to 38.2 extension, hitting the 50 extension and hitting the 61.8 extension, that's the limit for me. I won't let it go further to the 78.9 extension, and I will know that price is coming straight for the support zone right here. So I'm just going to wait. So yeah, I took this trade right here. This is what I'm talking about, that Fibonacci retracement can be used to take two entry. It can be used to take the retracement and the actual entry that they are waiting for, which is the buy going back up. Like a higher high to a higher low, then a higher high, like that. So I took this trade here. The usual for me, I know that price always, let me say 80% of the time, price always hits the 50 extension. So my stop loss is towards the 50 extension. Then here, and once it has hit the 50 extension, I am going to wait and watch price action to predict where I'm going to be buying from. Which I did not take this trade. I was satisfied with the profit I took from here, and I didn't take this trade because it was market closing. So I was not able to hold the trade in the next day. If not, I would have actually made money. So right here, guys, let's analyze how I would have taken that buy right there. So we'll go to the 15-minute time frame. Okay, it's clear to everybody where you will buy from. So when price is doing all this lower high, lower low, lower high, lower low, I'm going to wait right here. There is a rejection of the low right here, and I'm going to wait and I actually see a candle, or I'm actually going to wait for a break of structure, which happened right here. So most people buy from the rejection of the low and the break of structure. So I'm going to show you what is the rejection of the low and the break of structure. Guys, give me 1 second. Let me look for this paint, for this pencil or paint. So I found the brush, which is the paint. So right here, this is the rejection of the low. As you guys can see, this is the rejection of the low right here, and this is the break of structure right here. Okay. This stuff right here, this is the lower high, this is the lower low, this is the push up breaking this lower high right here. So we're having a new higher high, as you guys can see. So yeah, basically I always like to enter from the rejection of the low, which is right here. I always like to enter from here. Or if I don't see this, I enter from a break of structure, which is more secured. So if you hit stop loss, you will know that you actually took your right trade. So you have to follow your confluences. So that's what I would have done. I would have neither enter from the rejection of the low, or I'll enter from the break of structure, which most people do. Break of structure is the best place to enter. Rejection of the low, you don't easily spot it that easily and know when it's going to buy, except if you have a lot of experience with price action, which I like to do. So I'm going to go straight back to the Fibonacci retracement. I hope you guys know how to draw your Fibonacci retracement right here. So I'm going to show you guys the settings for the Fibonacci retracement. Okay. So guys, you guys can take the Fibonacci retracement settings right here. Right here, guys. So I love this Fibonacci retracement. It works. I found it from SUBRICBE, and it works like crazy, guys. This is the one that you guys should use. It's part of my confluences on why I'm taking the trade, and it gives me my take profit, which makes my trade more better. So yeah, guys, that's how I took this trade, which I was not able to take the actual buy, but I'm not pissed that I didn't take the actual buy. So I'm going to go straight to the new trade I'm taking right here. So we're going to take this off. Okay. I'm going to go back straight to the 1 hour. See, guys, I was right. I was right here. This is the best place you guys would have bought from. So I'm going to go straight to drawing my Fibonacci retracement. I hope you guys understand. So from the higher low right here to the higher high, sometimes it's not really necessary to count the wicks, but I do count the wicks. So I'm going to put it on top of the wick. So I took the trade from the rejection right here of the low. So this is where I'm buying from. Lucky, this trade did not get to the 50 extension. It got to the 38.2 extension, which is the best place I think is to buy. Most times it passed this, it even comes to 61.8 extension. So guys, this is one thing about Fibonacci retracement. You guys should be careful where you guys are buying. That's the tricky part. Always know price action and best place to buy from, which is guaranteed. And then you can capitalize more, putting in good risk reward trade and capitalize. So I'm going to go straight to 15 minutes to show you guys. So guys, I didn't like buying from here. I wanted to buy from here when I was coming, but it has not even got into the 38.2 extension. This is why I waited. It looks like it almost touches, but it has not got into it. So I waited for it to come inside more. So I saw a rejection of the low right here, showing me that market is about to start buying. Buyers are coming into the trade. Now waited for it to show me the actual candles I was waiting for, which I got these two candles right here, and that's when I entered the trade. And I'm currently in the trade right now. I don't really expect a pullback back down to no profits, but I'm expecting a little bit of consolidation right here. So because of my multiple touches, I already know that this trade is going to buy. So if I hit stop loss, I'm still going to wait for the right time again and take the trade. That's one good thing about having a good strategy and having your confluences right, because I know this is a buy trade. So if I take a loss, I'm going to buy again, which I don't think I will take a loss because I know what I'm fucking doing here. So yeah, so I'm going to show you guys. Fibonacci retracement works on to me it works on GBP USD and it works on gold, which I love to trade. I rarely trade GBP USD once a while, but it works on gold like crazy. It works. So I'm going to look around and show you guys how to use the Fibonacci retracement so you guys can see that this actually works. So right here, look at this. This is a good spot to put your Fibonacci retracement. Watch. from the lower high right here, guys. No, we're gonna go straight to the 1 hour because it's kind of looking funky. I need to be able to read price action. Right here, guys. Lower low right here. You can't put it here. That's one mistake you guys make. So you can put it here actually, but there's a lot of consolidation right here. One thing that you will not like to do in Fibonacci retracement is that you see price consolidating going into 38.2 extension multiple times. You have to wait for a proper time to buy. Most people will take this thing and eventually you see succeed, but you have to take the right proper place, and which is right. You have to put it in the right proper place, and which is right here. So a lower low right here, and exactly price come and hit our negative 27 extension. So I'm going to talk about negative 61.8 extension, guys. It does hit negative 61.8 extension, but not all the time. The best one for you guys to go with is negative 27 extension, except if you see that there is more volatility in the buy or the sell. That's when you'll be sure that price is actually going to hit it. So this is one way. I'm going to show you guys another way. This is downtrend. I just showed you guys how to put it in an uptrend. So this is the downtrend. I'm going to take this off and look for another one to show you guys. Okay. There's a consolidation right here on the 1 hour. From the week right here, lower high, so a lower low right here. It hits 50 extension. Like I said, most like 80% of the time it goes to the 50 extension, which it did hit right now, and boom, it hits my negative 27 extension. So guys, this is it. I did try Fibonacci retracement on BTC. It did work, but BTC had a lot of wick, so it kind of not really stand out. So it really works. You guys can check it. Check it on your peer. You guys love to trade. It does work. There's nothing really hard about this. You just have to put in more practice and it works. So we're gonna go back to our trade locker right here. So we had like a weak fluctuation right here. I still trust my trade. I know my trade is going to hit TP. You guys know now. So for new traders that don't know me, I'm Edwin. In YouTube, I am Vince Trade, which I would like to be called Vince Trade. And how did I come up with that name, Vince Trade? So I usually play game. My name on Games World was always Vincenzo. So I was able to put it as Vincenzo Trade, which I think is going to be cool if I actually had a name, Vincenzo Trades. But I had to shut it down to Vince Trade. So that's how Vince Trade came up. So yeah, guys, that's how to use Fibonacci retracement. There's really nothing hard about using Fibonacci retracement. It's pretty simple. Apply it to your confluences and it gives you your take profit. It gives you, I've never actually seen someone place 3 trades in one Fibonacci retracement. That means you have to catch from the place that you put your 100. That means you have to buy from there. And once it gets to the part that it's going to have a pullback, which you usually spot in a break of structure and a rejection of the high or rejection of the low, which I told you guys. Guys, check it out. It does work. That's when you buy, that's when you will sell again. And once it comes to your 38.2 extension, 50 extension, 61.8 extension, you buy it back. 3 entries, 3 profits. So I don't actually do that. I've tried that once, but I didn't get to do 3. I was only able to catch the buy and the sell. So best thing is to wait till it gets to your 0.00, sell from there, wait, catch the buy back up. So how to know how to catch the sell before the buy is to have good understanding on price action and know when is right about time to sell, is right about time to buy. That's one thing. So you guys should develop your chart time so you guys can understand price action more. That's how Fibonacci retracement work. It's very simple. It really add a really good understanding in your confluences and it makes you profitable too. So this is one reason I am profitable right now in this year. This is one reason I am profitable this year. So guys, yeah, Fibonacci retracement is really easy. You guys shout out to SWAGC. This is Fibonacci retracement. It works like crazy. So guys, that'll be it for now. So you guys like and subscribe to my channel. Peace. Hey, what's up, guys? So we're going to be talking about the trade that we took. So I'm going to be giving you guys the reviews. There's good news and there's bad news. So the good news is that yes, we made money. The bad news is that no, we did not make money from the first setup. We made money from the second setup. So like I said, guys, Fibonacci retracement is really easy to use. There's nothing hard about using Fibonacci retracement. It's pretty easy. So now I'm going to do a review about the trade. So as you guys know, We had a break even right here at 3,225. We had pullback right here, as you guys can see. You guys can see this rejection right here. You guys can see this rejection of the low right here. So we had a pullback. I hit my break even. That was a sad trade. At first, when it was coming back, I still had high hopes because I was waiting for, since it was a higher high, I was waiting for a higher low so we can push back, have a down retracement, and going back up, having a new higher high. But the higher high didn't show up. That's how I end up in a break even right there. And guess what, guys? Because I really wanted it to work badly, because I was like saying that if I'm going to show you guys the setup, that if I lose or neither do I, if I win, I'm going to post it on YouTube so you guys can see a clean setup. So I was not patient. I didn't follow my rules. I entered again because I still believe, because I said that this trade was particularly a uptrend. I knew that what I was talking about. I knew it was the uptrend. So I was waiting. I was waiting for the right entry. So I entered from here, which is not a good entry. Then when I saw it started pulling back, it was going back up. Yeah. So I entered from there and it was just a catch. So went back down and I hit my stop loss. Like, it was a very, very crazy trade. I lost about $130 something in that trade. So yeah, the trade didn't go as planned. So of course, like I said that if I hit a stop loss, I'm still going to take the trade because I know that this is an uptrend. So guys, that's what I did right there. As you guys can see, that's what I did right here. As you guys can see. Okay, and how did I know that it was going to go back up? I knew it was going to go back up because it was forming an uptrend. So I draw this line out here. We're going to wait for a break of structure. If you can break this lower low right here, which is hitting this new higher high right here, if you can push past it and break it, I'm going to enter the trade. That's what I said. So yeah, that's what happened, and we're able to break it. I was waiting for the right entry. That was one of the confluences on why I was going to buy again. I still wanted more confluences on why I'm going to buy again. So I waited for the right time. It came back to the support zone and bounced back down, and it bounced back up right here. So that's when I entered, and I entered in two positions because yeah, I was going to make it count. No risk, no Ferrari, the usual saying, but this was a good and calculated risk, okay, guys. It was not a risk that was just taking place. It was a risk that I calculated. It was a 1 to 7 risk to reward trade. Let's say 1 to 7.5 risk to reward trade. I was risking about $60, $80 in the two position that I had up here. So yeah, fresh, guys. You guys like my hair, right? I know you guys like my hair. So back to the Fibonacci method. So back to the Fibonacci retracement, and which I told you guys that works. So yeah, I knew that the strong buy was coming. When we finally hit this resistance zone, I was still holding the trade, even though we were having a pullback right here. But I knew that I was waiting for it to come to this multiple touch here. I was expecting once it come to this multiple touch, I will start making my second move, because I already broke even as soon as it broke this multiple touch right here. I broke even this higher high right here when it was giving me a new higher high right here. So I broke even right in this higher high. So when the market was retracing back, I knew that if it comes to this multiple touch right here, I'm going to make another new plan and try to capitalize as much as I can in trade. So as you can see, the trade went back up and it had a very, very, very good volatility, and we're able to break it. So guys, that's what I said. Fibonacci retracement is really easy to use. It was well calculated. Let me show you guys again. I'm going to go to 1 hour to show you guys. So you guys, for new traders that don't know how to trade, guys, you guys can add this. You guys can have a supply and demand, easy strategy, add Fibonacci retracement, add another confluences to it. It gives you good enough confluences on why you should be taking the trade. Easy. There's no, you guys don't need to be struggling, go run into ICT. I know ICT traders might cost me out, bro. I don't like their I don't like what they're trading. I don't understand whatever it is. I just focus on what I know how to use to trade, and it works for me. So, guys, Fibonacci treatment really works. So, guys, you guys can try it. You guys can shout out to Swaggy. This is Swaggy Fibonacci treatment. I've been using this almost 1 year now, so I already know what I'm talking about, guys. So, we're gonna go. I'm gonna go and show you guys again how we're able to catch the setup. So, you guys can see right here. Where's the Fibonacci treatment? Okay, I was not supposed to show you guys that, but yeah. So I was gonna go from here. Remember, we're gonna go from the higher low right here to the higher high right here. To the higher high right here, as you guys can see, on top of the wick of the higher high, which is right here. Okay, I mean, where's my brush? Which is right here, so you guys can see right here. So when the market has a pullback, it had a pullback here, as you guys can see, and that's how I was able to enter right here. Let me show you guys again with my brush. That's how I was able to spot this place, but I didn't enter on time. I entered right here, waiting for more confluences. As you guys can see, we had a pushback. I was hitting around 300, almost $300, bro. It just flushed back down, bro, to $40 something. I was like, bro, I was about to lose my mind, but I'm starting to get used to seeing a good amount of money that could be used for good things just go away just like that, because I was waiting for the actual. I was waiting patiently. Patience is key, guys. So yeah, retracement. I got a break even right here. I did not follow my rules. I placed another position right here. Boom, boom. I lost $140 something right here. I waited and I risked about 100 and almost $150 right here to positions, and the trade hit, guys. Simple as that. It's nothing hard. When it came back to my distance, I told you I was waiting for a break of structure. Break of structure happened right here. You can see this break of structure right here. Simple. It touched the 38.2 extension, almost the 50 extension. I took another trade. Simple as that. Boom, and it hit my take profits. And he had enough volatility. Oh, hold on. Yeah, it had enough volatility right here, like I told you guys, to be able to hit the 61.8 extension. You can see this volatility right here. The market was pushing, sawing high. So I know if there was any pullback, it will still have gone up, because I already know what I was talking about. So as you guys can see, that's what happened. It was pretty easy to do. Fibonacci retracement is very, very easy. There's nothing hard about it. For a downtrend, it's pretty easy. You put the 100 in the lower high. Once it push back down, once it goes up, giving us a lower high again, it's going to hit the 50 or 38.2 extension, push back down. You can catch the retracement up and you can catch it back down. The same thing for uptrend, just as easy as that. There's nothing complicated about Fibonacci retracement. It's easy to use. You guys are putting more practice. If you guys don't understand, guys, putting more practice. Fibonacci retracement work. I'm here telling you guys because I know what I'm saying. So if you guys like this content, guys, like and subscribe to my channel. Thank you.